Hey, welcome everybody to today's Market Explained, a 4-star podcast and video series. As most of our listeners and watchers and the videos know, we do market commentaries a number of times every month just to keep everybody abreast of what's going on in the financial world directly. And then we interview some great players in the financial industry, in the business world, who are doing unique things and things that we think people should hear about. Today, we are going to have a conversation about life settlements. And we have Michael Freedman with us today. Michael Freedman is a leading voice in the life settlement business. He's been one of the executives of 2 major life settlement companies. He's a leading expert on public policy in the life settlement business. He's been involved in crafting laws and certain regulations in the industry as well. And he's also been an officer in many of the industry groups that support life settlements. So, Michael Freedman, my friend, welcome to the 4-star Today's Market Explained podcast.
Brian, thank you. I'm really happy to be here, and it's good to see you.
Great, and I'm coming to you today from out in the desert in Arizona. So if you hear any birds, everybody, that's what's going on. It's pretty beautiful out here. Anyway, and Michael, thanks again. So, Michael, this is impressive stuff. You've been working in the life settlement business for a long time, and now we all see commercials from Coventry and other places, and we see these commercials, and we're like, some people are watching, some people are not. Maybe we can share with our listeners what actually is a life settlement. Let's go very basic here. What's a life settlement?
Great. Well, I certainly also hope people see the Lighthouse Life commercials that are airing.
Yes.
But it's a great question, and really, it starts with a predecessor question: is what is a life insurance policy? And a life insurance policy is a piece of property. It's an asset. It is an asset when it's created. In fact, the Supreme Court of the United States, in a life settlement case 111 years ago, back in 1911, said and recognized that it was an asset, saying that life insurance is an investment, a form of investment, a form of property. And the court said if you limit the rights of property for somebody to sell it, then it would have less value. It would be worth less. So you start with that understanding that when you take out a life insurance policy, when you pay premiums, you're buying and creating a piece of property, and you're investing in that property. And when you no longer want it, need it, or can afford it, and really just think about life insurance, the life of an individual, things change over time. The kids grow up. Maybe they're not calling, and showing the grandkids on Zoom, and so you get mad at them, whatever. But the idea being that the reason you took it out may have changed over time. The kids are now in their 50s, and they're fully grown. The needs for income in retirement are challenging. The premiums on the life insurance policy go up. So when somebody doesn't want to keep an asset, what do they normally do? They go to the market and get the best value that they can find. They don't just go and give it away. You don't just go back to the car dealer and say, here's your car back. You don't go back to the developer and say, here's your house back. What do you want for it? You put it on the market. And a life settlement is the market value return for somebody who owns a life insurance policy. They're not going to keep it. They have that right. They then sell it. Just a little bit more detail is that it's not for everybody. It's not for everybody first and foremost. It's not what they want to do. And more importantly for the market is that it's not for somebody who's in their 20s, 30s, 40s, or 50s, really, because the way the transactional life settlement works is that investors, largely institutional investors and some large institutional investors, they buy that policy through a regulated transaction, which I'm sure we'll talk a little bit more about, that they then own the policy. And when the insured dies years later, they collect the death benefits. Well, they're not going to buy a 20-year-old's policy or a 30-year-old's policy and pay premiums for 30 years. Usually the threshold is around 10 years, 7, 10, 15 years. Some funds like smaller or shorter life expectancies. So it's really a senior financial service option. And that's when people who own seniors, when they own their policies, often and most often are giving them up. and are faced with a lapse or surrender of that policy. So this is an alternative to lapse or surrender, particularly for seniors, and they get a market value return that outstrips the cash value in the policy. Or if they're not going to if they don't have cash value, a lapse, they're going to get zero. It outstrips it, and they get usually 4 times to as much as 10 times more. So that person who's got that policy that's invested in their policy is going to get a return for their investment in their policy that if they gave it back to the insurance company, they wouldn't.
Okay.
So that's really a lifestyle.
That's the last element. So I guess what we're to understand then is a life insurance policy is an asset. It's an asset. It's like any other asset, you could sell it. And a 20-year-old or a 30-year-old or a 40-year-old could probably sell it, but nobody would probably want to buy it, or if they did, they wouldn't get much for it, and it wouldn't be a very good transaction. So it really is only the seniors, like you're saying, that could sell their policy, right? So here we are talking about selling a policy and settlement, as you say. So what do people do with it normally? Do they not sell them, or do they not? What do people do with that?
Brian, it's a good question, and I'm sure we'll talk about it a few times, a few different ways. But every single year, several million life insurance policies are lapsed or surrendered that are owned by seniors. Mm-hmm. The statistics are that over 9 out of 10 life insurance policies that get created never pay a claim. They are lapsed or they're surrendered, 92%. So the policy that's taken out at any age is likely to lapse or surrender more than 9 times out of 10. So what people do, and I'll even say, if you think about the lexicon of insurance, when people talk about your insurance, what do you do when you don't want your insurance anymore? We drop it. We drop our coverage.
Right.
It's a term we use. We just drop it. But you don't drop an asset, you shop it. So don't drop it, shop it. I don't want to make that a click phrase, but it's a nice term. So in the vast majority of people, the millions of people who, seniors particularly, who could qualify for a life settlement are lapsing or surrendering it. They don't know about it. They don't know that they have an asset in their hands. And frankly, even Brian, to some of our experience, you see that financial advisors and insurance agents that are helping their clients, they say, hey, look, this year that premium is so expensive, let's not pay it. We'll take the amount that you would have made, the premium payment you would have made, and we'll go invest it in something else.
Right.
But when they sell it, they get that return. They're going to get multiples more than they would have gotten through surrender, or infinitely more if they just lapsed it. And they, instead of treating that premium payment as a liability, you treat the sale of the policy and the asset value, and you have more money to reinvest in retirement. So a life settlement is money good for people who aren't going to keep an asset. And instead of getting little or nothing, they get significantly more that does help them meet their retirement goals, help them pay for healthcare costs or other things that they may need. Millions every year that could qualify.
So Michael, in a sense, then when we talk of just dropping our policy, that's like auto, home, that kind of thing we pay every year, right? And you're paying premiums, but life insurance, you're paying premiums, but it isn't like a use asset and it goes away. It actually builds up value, right? Cash value. Everybody's heard of insurance cash. So that value then has some additional value, probably above the cash value. And that's the asset we're talking about.
That's correct. And I just reinforce, I've always am fascinated, and I get a little wonky about what's not the non-forfeiture value, that is expressed often in the surrender value. But I get wonky when I cite that Supreme Court. In 1911, they recognized that it's a form of investment and self-compelled savings. So yes, that's what you're doing with a life, and unlike your property insurance, your commercial insurance and other things that you're paying for, your car insurance. With a life insurance policy, you're creating property when you buy it, and you're investing in it when you pay premiums. So you should treat it as such. Yeah.
Yeah. So, all right. So then the next elephant in the room is, if 9 out of 10 people let their policy lapse and they just kind of drop it, as we said, that's an asset, right? So they're like dropping an asset and letting it go away. But that asset doesn't go away. Somebody has that asset. So who gets that asset?
Well, if it's lapsed or surrendered, the life insurance company that issued the policy, thanks you for your premiums and enjoy the rest of your life. If in a life settlement transaction, which we'll talk about also, is a regulated transaction through state insurance laws and the insurance departments, when that transaction takes place, it goes through a process in which the owner sells the policy to an investor. And like I mentioned, the vast majority of investors in the market are long-standing institutional investors that understand the space. They then take ownership of the policy. Again, through this regulated transaction, there's requirements that are really focused on protecting the senior, a protected class of citizen,
Sure.
by requiring lots of disclosure and other things which we can cover. But the investor then becomes the owner of the policy, the beneficiary, the beneficiary. The insured remains the same, what's known as the measuring life. The insured life doesn't change. But then that owner, that new owner, that investor, which is aggregating often hundreds and thousands of policies into a portfolio of assets, they have to pay premiums on that policy until maturity, until the policy owner. Until the policy matures, when the insured dies. And so that's how it's handled. There's full transparency in the transaction. The insured knows who owns the policy, and is given information prior to the transaction that give them that the choices and options of what they want to do.
So there's a regular process to sell it that's heavily regulated and to make sure everyone's protected. No one's taken advantage of, right? Basically.
Yeah, I'm happy. It's funny because we're in this business as what's known as a life settlement provider, which is a term that means we're the buyer. We're licensed in the state insurance through state insurance departments throughout the United States. Name me another asset you have to be licensed in order to buy. You don't have to be licensed to buy a car. You have to be licensed to drive it. You don't have to be licensed to buy a gun. You just have to register it. So it's interesting. We are required to be licensed. We have to pass through requirements of state insurance departments, background checks, financial responsibility requirements. All of our forms are subject to approval, are required to be approved by state insurance departments. The amount of disclosures and requirements in the transaction are such that today in the entire United States, there is not a single consumer complaint that's been received over the last several years by state insurance departments. And as a result, there's not a single piece of legislation that's being proposed or considered anywhere in the United States, a single piece of regulation that's, we have to fix a problem. The fact is consumers are getting value, and they're getting value in a well-regulated transaction that has the kind of things that I just mentioned that are unlike anything else.
So I think this is really a great service that people can get value. They don't need the coverage anymore, and they can actually sell the policy to a regulated buyer like Lighthouse Life or another company. And so that's a good thing. And I guess what I was getting at before too, Michael, just to clarify for our listeners is 9 out of 10 policies lapse, and that's an asset. So the asset goes back to the life insurance company. So maybe that's part of why life insurance companies are so profitable. People just leave assets with them. I don't. Maybe this is the right thing to do. And naturally, some people, will hold the policy and then, policy pays off when someone's passing. But more often they lapse than anything else, right?
Yeah, way more. And I think it's important, two things, I guess. One is, it's why I've been in the market for 20 years. It's you find a passion, and we're helping people. And imagine the individual who's up late at night, hopefully sees our commercials and says, geez, I didn't know that I could sell my life insurance policy. I have a premium notice, energy bills are up, 401ks are down. Imagine the individual who has a life insurance policy that has more value than the equity in the home that they're sitting in. They just didn't know it.
Didn't know it.
And so that folder in the drawer, or that file that they have, that's super important for folks to know that they have that, and that they can go through a life settlement and be well protected and well represented, et cetera. And that's super important, because that's them being able to continue their standard of living and their addressing costs of living, and invest in their retirement by getting a market value for their. So it's just that's what we're doing, and that's why it's important for folks to hear about it, including advisors, including others.
It is. And many advisors are not really aware of this whole process as well. So obviously, like we said, we see a lot of commercials from your company and others about this, but I think the public is really pretty much unaware. And I'm really glad you could join us today to tell us a little bit more about it. You did tell us a little bit about the transaction. Is there anything else you want to cover regarding if someone wants to sell a policy?
Yeah, I think I do like talking about it. As you mentioned at the outset, I've worked in public policy on this issue. I had a hand in drafting and adopting all of the laws that exist in this country, which is a unique experience, but one I'm very proud of. And I will mention just one or two, and I think it's really, again, you can't find another financial services transaction with these kinds of requirements. I already mentioned licensing of the buyer. But when somebody sells their own life insurance policy, we can't buy it unless their doctor certifies to their competence. Imagine that. You have to have a doctor's note to sell your life insurance policy, which is a good thing. And importantly, it's not our doctor. It's not somebody, their attending physician has to certify to their competence. They have to be told when they come to us, by us, we have to tell them, hey, you know what? You may want to sell your policy, but there are other ways you should think about keeping your life insurance policy. Right. You should think about policy loans or accelerated death benefits, reducing premium so that you can afford it, reducing the death benefit and reducing premiums so you can afford it. We're required to make disclosures that are not in our interest, but are in the consumer's best interest. Right. And in addition, one of the absolute other critical things is that when we buy a policy, we get the current beneficiaries to acknowledge that mom or dad or the business is selling that policy, and that's consumer protection for sure. But it also it achieves quiet title to the asset. You're not going to find 5 years later or 10 years later. It's why we have no regulation or legislation pending. You're not going to find 10 years later, hey, dad, or 2 years later, dad didn't know what he was doing. We have the competency certificate. I didn't know dad was selling his policy. Yes, you did, because you were the beneficiary. So those levels of consumer protection also provide for investor protection, if you will, for the asset owners in this market. And again, I think the best tale of all is bottom line. Every single person who sells their life insurance policy through a life settlement does better as a matter of law and practice than if they give the policy back to the insurance company through a lapse or surrender. It's a matter of law that we have to beat cash value. And of course, if there's no cash value, if it's a lapse situation where they're just going to walk away from the policy, we're going to give them more money than zero. So as a matter of practice and law, the life settlement is money good for somebody investing in an asset, investing in their family's benefit, and they can get some of that benefit for themselves while they're still alive.
Well, this is great explanation, Michael. We appreciate it. So our investors and advisors who are working with investors can talk about this as an option to consider if the coverage is no longer needed. Things have changed, circumstances have changed. So it's a good solid option. So thank you. And Lighthouse Life would stand ready to consider acquiring a policy from someone if they did want to offer that up and sell it.
Yeah, and I think it's important to go a little further into the transaction so people understand beyond the regulation that I talked about, that in order for us to consider purchasing a policy from a policy owner, we need information. And the general buckets of information that we need are health information of the insured or the multiple insureds under the life insurance policy, as well as policy information. So there's underwriting that has to take place, and it's really both medical underwriting and policy underwriting. So when we get a contact from somebody, when a financial advisor refers somebody to us, or we get somebody who sees our commercial or sees us on their browser and they contact us, we start collecting health information. First, they voluntarily provide us some self-reported information, their age, their health relative to other people, any conditions that they want to disclose. Also, under HIPAA through a HIPAA authorization, we then can collect additional information. They agree to do that. You can't do that without an appraisal. The appraisal can't take place without that kind of information. So we start collecting other information. It doesn't really require them to get much more than give us the authorization and the names of their physicians, and it's routinely done all the time. And we also need information about the policy. What kind of life insurance policy? Obviously, the amount of the death benefit, information about the type of policy, any loans out of the policy, other factors. And importantly, what we need in order to appraise a policy is what is the current assumptions, the future premiums that have to be paid. If somebody were to buy that policy, they would have to pay the premium. So how do you do that? So you put those into the measures that then result in an appraisal. It's it doesn't cost them anybody anything. It doesn't cost the policy owner or the insured. It certainly doesn't cost the financial advisor or insurance agent. It's saying, hey, let's get it appraised. It's a free appraisal service. And if there's a value, we're going to make an offer. And we're going to offer to give that person, as I mentioned several times now, a multiples above cash value, if there is cash value. So that's really the part of the transaction. And then again, simply boring stuff. But if there's an offer and an acceptance, the forms that we use are contracts that are approved for use by state insurance departments in the state in which the individual lives, and the transaction rolls on from there. And that's probably a good explanation for some of the details.
Excellent. Well, good. So if it does come down to it that any investors are listening to this, or any policyholders are listening to this, like to have a conversation with us or with you, we're open to doing that if you should choose to. So
absolutely.
So cash flow and income from investments has been difficult. So this is an option to consider for sure. So anyway.
It is, and I'll tease a little bit too that in the near future we expect to also provide another investment vehicle for folks that really reflects the positioning of a company like ours in a growth market. And I don't want to get too much into that, but that's something that also is a way for folks to participate, because yes, it's good for fixed income, but there is, real growth upside in this market. We're starting to see, and we anticipated, which is why we started Lighthouse. We are starting to see some really nice private equity deals in our space that reflect the growth in the business. The asset investors are there. There is actually more capital than there are assets to buy right now, which makes good for Lighthouse. But again, the idea that just being in a senior financial service business and having an offering that reflects that is something that we're coming forward with as well. So they'll have multiple ways for folks to participate and what meets their needs.
Excellent. Well, this is a much better conversation than just blaring commercials that come across our TV. So I'm glad we got a chance, Michael, to spend time and dig through this. So we're probably going to be seen by a couple hundred investors in the near term, and over the next year, maybe 1,000 people will see this. So I always like to pose the final question: that imagine you're in a conference room with 1,000 people, and they're all watching, and so you have an opportunity to send any other messages that you'd like. Any other messages you'd like to send, Michael, to that 1,000 people sitting in the conference room?
Oh, goodness. Thanks. I guess I'd say what we've said throughout this entire time, which is that you're helping your client by looking at the life settlement market for your client, both as a policy owner on an asset they're more than likely going to get rid of before they die, unfortunately, but realistically. And they should look at it as an investment opportunity. And understand that and again, this is my bias coming out, is that it is a really safe, secure, well-regulated transaction for folks, both on the consumer side and on the investor side. But that I guess I'm just reinforcing what we've talked about. But people really shouldn't be, and particularly financial professionals, should not think that life settlements is something a bridge too far or something they want to stay that much further. It's actually, if you think about what's happened in the last few years with Reg BI, suitability standards, fiduciary responsibilities, and while this is not a securities transaction, when somebody sells their life insurance policy, it's not a securities transaction. But the fact is that they are acting in their client's best interest when they're getting it appraised. They are acting in a suitable manner to get a market value return and getting a free appraisal out of it. And if it works, great. So again, it's all the things that I think. It's why I've been in the market all these years, and I guess that's where I throw it back to you and say thanks for the opportunity. Yeah.
And I think for our listeners, the basic idea is if you own a policy and you don't need it anymore, the coverage is no longer needed. Don't drop it, shop it. Right? We talked about that. So don't drop
Trademark.
it, shop it.
Yeah.
And if you're an investor looking for other opportunities, this could be a good opportunity also for the income side of your portfolio. So those, I think, are the two messages I think I'd like to offer to everybody today. And we've had a real titan in the industry here with us to share ideas. Michael, thank you very much for being with us on today's Market Explained, a 4-star media event. Let's call it that. I think we'll leave it there, Michael. Thank you for joining us. And thanks, everybody. We'll be back with another interview very soon with another important player in the investing world. And we'll have a market commentary issue coming out as well right after this one. So again, thanks everybody for being with us on today's Market Explained today. And we'll be back soon.